While OPEC Plus announced that they will be increasing supply starting within the month of October with an additional 137,000 barrels per day, the Trump administration has announced its intentions of levying severe sanctions against Russia. For this week of the new and improved Commodity Corner, we're going to focus on the markets that are on the move. We will provide insight and commentary into those markets that we feel offer the best opportunities for traders in the upcoming week. Those will include oil, natural gas, silver, gold, platinum, and coffee. As oil is front and center in the news, we will start there. The given. The market knew that the increases were coming and were therefore pricing them in, hence the 3-day sell-off. What was not known and what came as a complete surprise and utter shock was the attack on Ukraine by Russia. This attack has been classified as the largest aerial attack on Ukraine by Russia since the war started. The Trump administration, as well as the world, is outraged. The Trump administration, as well as the world, is outraged by it. While in front of reporters, Trump vowed severe and harsh sanctions against Russia, hinting that the sanctions will be designed to cripple Russia's cash flow, aka oil and gas. Market can withstand sanctions against most countries without too much supply disruption. However, there are certain countries or producing nations where the market will stand up and take notice. Countries where the hit to supply cannot be absorbed. Russia is one of those countries. The market will not be able to absorb it as easily, and even though there is an increase of supply coming, it may not be enough to keep a lid on prices, especially given that Russian sanctions are also coming. As such, we believe oil will become increasingly difficult over the next few days as headlines will be abundant. Oil is the most political of all commodities, and it will surely not disappoint. We have a daily chart in front of us of oil. Now, we did break this sort of quasi-shelf to the downside on that 3-day sell-off. However, the market now with this news of Russia-Ukraine potentially looks like it. Even though the market is open now and we're trading around $62, we would not be surprised if the market moves back to the mean and starts to trade within the range for this week of 64. Our expectations for this week is that the market should be somewhere trading between $63 and $66. We believe headlines will be what causes the spikes in price. We don't believe for now that a break of $60 is in the cards. We believe the market is probably going to live somewhere in this area of about $63 to $66. We also believe that headlines will be fast and furious, which will therefore wreak havoc on any positioning, especially on the intraday basis. We believe that things will become a lot more complicated. We therefore suggest risk down and trading smaller than usual because of the fact of these headlines. Headlines can be treacherous. The algos come out of nowhere. They can take the market a lot farther up or down than you would like to believe. As we said, we believe over the next couple of days, oil will become increasingly difficult. We don't expect it to move to the downside with authority. We don't really expect it to move to the upside with authority. We expect a range of around 63 to 66. We would not be shocked if oil settles the week around $64. With that being said, let's move on to natural gas. Natural gas was one of our trades of the week from last week. One of the other markets was silver. We're going to get to silver shortly. Natural gas was one that we're keeping on our radar. It did well. The market is definitely starting to move to the upside. Obviously, we have seasonality coming into play. The winter season of natural gas is October through March. We're coming into October. Granted, we are only in the beginning of September, but the market is starting to price in more bullish activity in natural gas. Our original thesis was natural gas in the $4 to $5 range. We have shelved that for now. Our expectation is that the market within the next couple of weeks should make its way back up to $3.50 and hold. From there, it will all be dependent on weather. We believe that $4 to $5 eventually will come into play. But for now, our anticipation is the market should hold here and move towards that $3.50. We believe that the downside movement is over and the market is now acting bullishly. Our proprietary indicators are telling us as well and confirming as well that the market has turned from bearish to bullish. So we believe that moving forward, For the foreseeable future, the bottom is in and the market should start making its way back. The second market that we were focused on and we were hyper bullish on for last week, which most certainly did not disappoint, was silver. We have in front of you a monthly chart. The reason being is we want to show the levels of where the silver market has come, where we think it's going. So the market last week took out the July 2011 highs. Let me repeat that. The market took out the July 2011 highs. The July 2011 highs were 41.465. The market got well above that. We broke 42 and we settled above that level as well. We believe that the market will continue in its upward trajectory, with next spots being the September 2011 highs of 43.5, followed by the August 2011 highs at 44.275. The market is extremely bullish. The market has not been here going back 14 years. The momentum is there on the upside. We believe that this will continue. Let's just switch to a daily quickly. We believe that this low at 41.065 should hold. If not, we think that $41 will probably hold for a continued upward trajectory. We believe that the September and August highs of 2011 will eventually be taken out. We believe that over the course of the next couple of weeks, especially with a ramp up going into next week's FOMC meeting and press conference, we believe that silver should continue in its upward trajectory, and we believe that it should get to around $44. Once we get to $44, we can reassess, but we believe that the market will ring the register around $44. We're looking good. There's a lot of momentum to the upside, and we believe it continues. Let's move on to gold. Our original expectation in gold for last week was that the market has a tendency of trading in a range, breaking out of that range, and then falling back in. We were pleasantly surprised when gold did not do that. Our expectation was that we would probably find some kind of tradable pullback and bounce into around 34.5 and then try and go again. Instead, this is a clear breakout. We had 1, 2, 3 touches, and then the fourth one we just went. Usually what gold does, as you can see, going back to April, it trades in a range and it just chops around. This time it finally broke. We believe that for now, the path of least resistance is up. Gold is looking really good, especially leading up into next week's FOMC meeting. We believe that gold should continue higher. After that, it's a different conversation. But for now, people are buying gold and they're moving gold to the upside. Something to note is that gold is the one asset class that's being margined, and it's being margined very heavy. We've heard reports that people are able to margin their gold, meaning they can borrow up to 90% of their gold value. So gold is being margined as well, which is also adding a little bit more fuel to the fire. Let's look quickly at platinum. Out of all the metals from last week, platinum was the one that really was interesting. Why was it interesting? If you were going into Wednesday, platinum looked really good. It looked like at that point, platinum was probably going to end up somewhere in this 1500 area. I would even venture to say 1500 to 1520. Wednesday was a stand up and take notice day, and it really, to a large extent, caught a lot of people off guard. One of the things that is quite shocking about the way that the metal acted was gold and silver really took off. A lot of and even though gold's not an industrial metal, but silver is, platinum falls under that bucket of industrial metals. Platinum was an outlier. Right now we're holding somewhat in this support line around 1375-ish where we're holding. If the market falls back and takes out Friday's low, Friday the 2nd's low of 1366, then it's back into the choppy range and its specialness is gone. For now, it's holding where it needs to. What would get us excited is if we were to take out Friday's high at 1412, even 1415, and then start making a beeline towards Thursday's highs of 1445, 1446. If we were to do that, then I think this was just nothing more than just some kind of selling opportunity to ring the register. If it does not, then platinum has lost its special status, and really the best metals to be in right now are gold and silver. And finally, let's end off in coffee. So coffee had a big run coming into the past 2 weeks. It is holding exactly where you would like it to hold. It's holding this 365, 368 area. The market looks really good. It's a nice bull flag here. Market is really holding in, and it's holding in well. The market is making higher lows. We believe that the market is probably going to try and get to this 400 area. We think that 390 gets taken out with ease. That's this 390 over here. We think this will get taken out with ease. We think the market ultimately is probably going to try and get up to this 410-ish area. It's going to go over the course of the next couple of weeks, and then from there, we'll reassess. But in a nutshell, these are the markets that we believe will offer the most opportunities, best opportunities for the upcoming week. So to recap, that would be oil, natural gas, silver, gold, potentially platinum, and coffee. Thanks for watching, and we'll see you on the next one.